Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, May the 13th. The year is 2024. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. I didn't do a weekly wrap-up on Friday, and I almost wasn't able to do this video today because the broker that I normally use for displaying these charts no longer allows US-based traders to trade. And not only do they not allow you to trade, they also took away the feed. So I had to go and go back to one of my other accounts and get everything set up so I could continue with these videos. It's funny, it's always something. And as always, these videos are for educational purposes only. Your results may differ from mine. And we're, let's see, in the middle of the month of May. We're starting the second full week of trading here. And I just want to remind you about risk management. You know, never lose more on any one single trade than you're willing to lose. That's just being smart. So let's get to it. We take a look at the weekly chart here, and we can see looks like everything gapped down and it's all filled. And right now the pound is 41 pips above the weekly open, 13 off the high and 42 off the low. If we zoom out into the monthly chart, you can see we're 64 pips above the monthly open, 79 off the high and 110 off the low. And we're right in about almost the midpoint of the, actually maybe a little bit above the midpoint of the previous month's candle. We're putting in the opening range for the week. You can see we broke out of the opening range for the month back at 25.50, so we're 6 pips above it. And if we look here on the year, we are 157 pips below the yearly open, 338 off that high and 256 off of the low. And once again, we're right there inside the body of the previous month's candle. For the inside bar traders, we are in the inside bar range from the daily inside bar 5 days ago, 5 trading days ago, that is. But we are below the low of the weekly inside bar and monthly inside bar, those last inside bars, which was 7 weeks ago, and for the monthly 4 months ago. But you can see here we got a lot of inside bar action on lighting up on the weekly. Looking at the range, we've got 2 pairs over 100 pips. Not the yen, but the pound dollar clocking in at 55. And since I mentioned dollar yen, you can see it's back up to 156. It looks like it wants to get back up to about the 157.75 level, maybe. That might be a target to shoot for. Buy zone was all longs here on the pound dollar today. Nothing but long trades. And I don't know what happened, but when I opened the chart about 4 hours ago, 3 hours ago, it just looked like there was an explosion up from the launch pad here at the 2540 level. Broke it and then just launched up, and it did hit the 60. That 40 to 60 range seems to happen a lot because we've got the 50 psychological. There's probably stops on either side within that 10 pip range, and that's why price just seems to rocket through, hence the name Launchpad. And once again, it's just something that I've observed And if you've been watching my videos, I've talked about it a lot the past few years. And the rats, red rats, looks like they're getting ready to feast. We had some rat reversals, you know, turn trades, rat reversals. And on these, you just basically have to trade what you see. And for those who might not be familiar with the rat zone, just a quick explanation. It's something that I observed looking at the daily candles, how big the wicks were on the pound. So I ran frequency distributions to show that the high minus close and close minus low were usually greater than 20 pips, even though the range of the pound has shrunk a lot over the past, say, 10 years or so. It's not as volatile in terms of range as it used to be, but we can still trade the rat zone. Basically, price is going to make a new high in reverse. It's going to make a new low in reverse. It does it every day. It's nothing earth-shattering. It's, you know, kind of a simple observation. Bambino Flex had to go long. Price near the pivot was a short. And it looks like that might have paid off once. We haven't been near S1 at all. But you can see here, it looks like the Bambino Flex indicator paid off again. We've taken out today's pivot. We've taken out the weekly pivot, and we've taken out the monthly pivot. Looking at H4, you can see we have a couple of pivots. Most recent, in fact, the current H4, we only missed that by half, 0.5. And once again, I use those H4 pivots as biases, basically trading the H4 open crossover. Looking here at the wick zones for the previous trading day, you can see in and out of the wick zone, there was, it seems like the daily candle was pretty much a doji. So that's why you can barely see any space between the wick zones there. And looking at the range, last week we had a range of 149. And we did not break out at a previous high, but we did break out at a previous low by 21 pips. So for people who can't really sit and watch, you can take the previous days high-low, previous weeks high-low, previous months high-low, and just set trades to take the breakouts. Usually you can pick up a couple of pips, kind of a look ma, no hands type of trade. You don't have to be there. You can just set your TP and stop loss ahead of time. And, you know, one of the things that traders, I guess, I don't know if argue is the right word, maybe just spirited debate. They'll talk about, well, you know, it went up 3 pips and then it went down and you stop out and then it went up 6 pips. And it's like, well, if you put your stops that tight, of course you're going to get stopped out from time to time. So, but then it's like if you make your stops so big that if you do get stopped out, you know, it might take away 5 or 10 trades worth of profit. You know, it's like you don't want to do that either. So that's why you have to come up with a plan and work it out so it works for you. You know, if it was as simple, oh yeah, well, let's just put the stops here and they'll never get hit, and we'll put the TPs here and they'll always get hit, well, the market would cease to exist. It's just not, you know, it's simple, but it's not that easy in the sense that, You have to figure out what works for you, what works for the instrument you're trading, and then trade accordingly. I mean, when you've done it, 1,000 times or 10,000 times, or who knows how many trades you put in, that's when it's easy for you. And the ease comes from, if you think about it, the repetition. You're not thinking as hard. That's what makes it easy. You see your setup ahead of time. You know what you're going to do ahead of time. And then you do it. You don't really think about it. You just pretty much know it. And then every now and then, you might do something that gets yourself in a little hot water. The market doesn't quite react the way it normally does. And you find yourself maybe taking some heat, maybe even getting stopped out on a trade. But that's part of trading. Then you just learn to live with it. And so, as I had mentioned about, looking at the, previous day's highs, previous day's lows, or a previous day high low, previous week high low. Right now we're on a weekly chart, but you can see here we broke out of the previous trading day's high. And right now it's up 14 pips. And it's just these simple little things that you can do over and over, as opposed to trying to evaluate and reevaluate and come up with new things every day or every other trade. What you want to do is cut down on the variables and really go for the consistency. Once again, I made a chart of just the previous 5 days highs and lows, and just, get an idea what's price doing. It also has midpoints and closes on here, but you can just see what happens at these horizontal lines. I mean, it went to this line that was from 5 days ago, and then boom, it just stopped. Then it tested it again. Then on the third time it broke. Then on the fourth time it took off. But I mean, here it hits, comes back here and stops. And you can see, just looking to the left, well, yeah, it stopped there before. Look to the left, yeah, it stopped and reversed in this area before. So then, as Swalmall like to say, it gets in these little ranges that he likes to trade. And finally, it leaves the range one way or the other. It's these things that you can see. Now, for the month of May, we have not added to the year-to-date accumulated range. So, and I think we showed the range. So we've got 189 in range so far in the month of May. April was big compared to been climbing each month, it seems. So we'll see if we still climb in May. I doubt it, but anything can happen. And if we look at the what ATR percent we're at 52. So we just might have a nice range happen this month. We'll have to wait and see. Okay, looking at the trade reminder. I do believe that's what this indicator is. Yeah, trade reminder. That was just something I wrote just to have some of the simple things that I like to look at. So rather than have to think about it, the computer just tells me, okay, take a look at these things. So buyer strong control, price between the wick zone, we crossed above the previous mid and pivot. So things are saying long for the week, buyer strong control, lower high, higher low, so inside bar. And then come down to the day. Let's see, we are above the upper wick zone. We've exceeded the previous day's range, buyer strong control, higher high, higher low. So once again, almost stating the obvious. So fellow traders, I hope you have a fun and safe weekend. Hope for any of the traders out there who are moms, I hope you had a nice Mother's Day. And when you're trading, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And thanks again for watching. This is TheRumpledOne, over and out.